Insurance is a wonderful hidden value, much looked over by brokers and dealers. Insurance primarily is used to increase the value of the thing being monetized. Before you can consider a wrap for your asset, you'll need to have insurable value. Insurance wraps must be applied for and can take several weeks to create and carry a medium fee rate of 2 to 5% of the total insured amount. The client can be involved indirectly, must provide adequate documentation to qualify for the insurance, and are flexible for structuring added value. To better understand insurance wraps, let's look at a short view process from the beginning. Once the client has acquired all necessary documents acquired by the issuing bank or institution that's offering a debt value of the asset insured, the client will submit their application for approval. An insurance wrap is similar to full coverage auto insurance. Let's take a look at an example sheet. The client's asset is worth over 62 million US dollars and has no liens or debts attached and owns it all outright, making the total value of the asset over 62 million. It's important to note that insurance wraps will have a higher difficulty performing if there are any liens or encumbrances. Let's take a look. For this example, let's use a purchase of a new Bentley that you just made that cost you $1 million, including taxes and fees. And the very next day, your neighbor runs their car into yours. Let's say that your insurance was generous and granted you 90% of the value and paid you $900,000 for your losses. This creates a total value of $900,000 in insurance value. However, if you decided to take a loan out for the Bentley instead of paying cash, the math ends up much different. Your asset is now worth negative 100,000. So we can see that insurance has a monetization value when the asset is owned outright and will require additional value like a surety bond in order for an easier monetization process. Now that we have a better understanding of the positive and negative application of insurance, make sure your asset is owned outright prior to exploring additional options. The total value of the asset remains the same because there are no liens on the asset. In this example, the insurance can provide 50% coverage of assets, including in ground, making the max value of $31,260,000. The fee for filing the insurance costs the client 2% of the total amount insured, creating a total fee of $625,200. Once all of the required documents are processed and the payments have been made by the client, the connection is made to the bank by the client, and the insurance is prepared for issuance. Once the insurance and the client are reviewed by the bank, the insurance will need to be assigned to the monetizing bank, and once confirmation has been made that they are the lien holder of the insured asset, funds will be allocated for disbursement and delivered to the client's account. This concludes Intro to Insurance.